Hey, what's up, guys? Node Investor here, back from a few days of time off, enjoying the holidays with friends and family. I was going to post a normal weekly review. I will post that tomorrow, kind of doing the weekly recap. And today, what I'm going to post here instead is this is a live stream I just wrapped up with the private group here today, going over the head and shoulders reversal bottom pattern that everyone's seen, everyone's talking about. And I use it more as an educational to talk about the characteristics of this pattern, some things to look for, as well as 3 ways that I like to trade it, and some ways to set targets and different ways to analyze it. So we look at one, just kind of the basics, then we'll talk about the inverse head and shoulder pattern that was formed this summer on Bitcoin over June and July. And then we'll do a deep dive on the current one that is potentially forming today and some targets that I'm watching and some ways that I'm trading this here near term. So I hope this helps. This is more of an educational, kind of give you a behind the scenes look as at the live streams that we do as a group. So this is just the first half of the stream. After we wrapped up the head and shoulder talk, we went into some deep dive in charts and setups and different names to be trading here over the next couple of days. But I thought I'd share this first half with you guys. I do have, for those of you that are subscribers to the Node Insiders alert system, here under resources there is a training courses, and my entire library of trading videos is here, and I've added quite a few recently, different indicators, Fibonacci ratios and extensions, which I do mention in this video. And so for those of you that have access to this, if you're not familiar with some of those indicators or some of the ways that I'm talking with, risk reward ratios and stop loss and all that is here. It is included as part of the alert system, as well as my video course that I did last year with Technical Analysis 101, and that does include a quick 9-minute video on head and shoulders patterns as well, if you want to get a quick recap there. So I hope this helps, guys. Enjoy. Thanks for watching. We'll look at the charts. I'm going to look at the head and shoulders pattern that is emerging here on this chart, but I'm also going to use this as an opportunity to do a little bit of kind of educational type of stuff here. And so what I'm going to do is in this first segment, I will go over, the head and shoulders pattern. Most of you guys already know what it is and how it plays out, but I'm going to kind of do a little deep dive on it, what characteristics to look for, how to look for targets on it, as well as 3 different ways to trade this particular pattern. It's not a very common pattern, and it's really not very common in this big of a time frame. We saw a head and shoulders pattern form over this summer, and that materialized and had a very nice rally after that one broke out. And this one's looking very similar. The price action today is starting to really form a nice right shoulder here, so it's looking good. It's looking positive. It's kind of lining up with some of the things I like to look for. And so I'm going to continue to trade this pattern here as it plays out. And I also think some of the alts are going to continue to do well if this continues to look this way, because it's going to just continue to add confidence to the market that a near-term low has been set, right? This is a reversal pattern, a bottoming pattern. You see it both in bull and bear markets, but it never, it's never the low, right? It's just a low, a pattern. Could it turn into the low? It certainly could, right? Could 3100 be the low that we look back at here and in months later and say, yep, that was the low? Absolutely. Is it definite right now? No, it's impossible to tell now if this was the low. Certainly has put in a low. We've seen some good volume, seen some running. We've had a nice pullback here over the last few days and starting to see some volume come back in here today. And so all in all, it's looking pretty positive. So I'm going to go over that. We'll do a deep dive on this pattern, the ways that I like to trade it, look at it, and then we'll look at the charts. And so it's going to be a little bit of an open session here. I'll be looking at the charts, be looking at kind of watch lists and setups. So I'll be taking notes on a different screen here as we do that. And then what I'll do is I'll just summarize and kind of cherry pick the better setups and charts that we find as a group here. And then I'll repost those on our channel. That way so you guys can kind of have a recap of those charts that we found. So let me start off with the head and shoulder first. I'm going to clear all of this. I'm going to redraw it real time so that way we can follow along. And in fact, I'm going to clear my moving averages for now and just make it very simple, price and volume only. And I'm going to take this 3K line off here. Let me clear that. Okay, and so I'm going to just go use this as an example to kind of walk through the pattern and then just some ways to look at it. So before we do that, so looking at the head and shoulder pattern, there are multiple patterns, right? If you look at the traditional head and shoulders, you get the topping action, and it's essentially, you know, 3 peaks with the center peak being bigger than the 2 other peaks. The reversal pattern is the inverse head and shoulder pattern, right? And it's a similar action. It's basically the inverse of that. And it's a bottoming pattern, a reversal pattern with 3 peaks and the center peak being lower than the other 2. And you can have different variants of this pattern. I'm going to just talk about the most common 3-peak pattern, but you can have some that have 2 shoulders and a head. They call that the complex pattern. Or you can have one where it's a shoulder and 2 heads and then the right shoulder there, right? So there's different variants of the head and shoulder bottom patterns, but I'm just going to talk about the most common, simple left shoulder, head, right shoulder type of pattern and how they look and what ways I like to look at. So the most common thing to note is you have the 3 peaks, and some of the key characteristics of these 3 peaks are symmetrical. So generally speaking, the stronger patterns will have the right and left shoulder being almost equal distance from the head, and also price and time wise, right? So you know, the price on the shoulder depth is going to be very similar to the other shoulder price depth, and the time from this peak to this peak is going to be very similar to the time from the head to the right peak. So symmetry is good. You're never going to have a 100% perfect pattern, but the closer you can get to symmetry, the better the pattern, the more strong it's going to play out. The other thing to note is the shoulders are basically, you connect the rise between the left shoulder and the head to the next rise. That line connecting those two creates the neckline, and then you extrapolate that out, and that's your breakout point when it crosses the neckline. So that's how you do it. I generally just discount this leftmost part of the chart because it can be very choppy. It's usually at the end of a downtrend. But when you have that first rise and then the subsequent drop that creates the head, that peak there connected to the next peak, that's what draws the neckline there. And then there's volume. Typically, the better the pattern, the more volume will be on either the shoulder or the head. And then the right shoulder, this little section back here, will have lower volume than these 2 sections. But then you want to see strong volume when it breaks out of that neckline. And so those are some of the key characteristics. There are many variants of this. You can have some where the neckline is actually rising, so it looks kind of like this. But the ones where the neckline, see where this one would be rising like that, the ones where the neckline is sloping downward are stronger patterns. And so that would make for a better pattern there. And so those are some of the key characteristics. The taller our patterns, the better than flatter patterns. So, you know, I'd like deeper shoulders, deeper troughs here versus a little bit more of a shallow type of thing. This is still technically a head and shoulders, but you want kind of those deeper peaks. Those make for stronger patterns as well. So just keep those in mind as we go through some of the thoughts here on the Bitcoin chart pattern that we're going to look at here first. So real quick, let's go back to the chart pattern that we saw here over the summer. It provided a very nice example, and then we'll look at the price action that we're seeing here today. And so over the summer, we were on a big downtrend following the top in May, and we had the first shoulder low in June, middle of June 13. And so you can see that was that low. Then we had the subsequent rally, so we went from 6,100 all the way up to around 6,800, and for multiple days we hit a peak there and then a big drop lower, and then we had this almost complex head and shoulder pattern where you can say that was 2 heads. It formed a little bit of a double bottom here at this 5,800 price mark, and then we had another rally which went right back to that 6,800 mark, and that started to form that head and shoulder pattern here. Now this was a little bit more of a flat neckline. It wasn't necessarily sloping downward. It had a slight slope, but not a real strong one. So it was really more of a flat head and shoulder pattern with this complex pattern here at the lows. It was a little bit more of a double bottom with the head and shoulder pattern there. So two heads technically. If you look at it on the 4-hour chart, it looked like two heads. On the 1 day chart, which is what we're looking at here, it was just a simple head and shoulder pattern here. So left shoulder, right shoulder here. Now some of the things that I was watching on this particular pattern, which played out almost perfectly, is I like to use Fibonacci retracement levels during the right shoulder here. And so what I do is I'll take the depth of the head, run it up to the peak there, which creates the neckline, and then I like to see the shoulder land around that 50% to 618 level on the pullback there when it creates that pattern here. And you can see that's what happened here. We had a few wicks below that 618 level, but it never closed below that, and it held there for 3 days before it started to move up the right side here. You also notice that the low of this shoulder was pretty close to the low of this shoulder here. This shoulder here bottomed at around 6,100. This one briefly undercut 6,100, but never went below that. It was 66,080 basically, and just tested it a couple days and then took off from there. So the Fibonacci retracement levels really help me when I'm looking at these targets to the downside as far as potential shoulder depths. And the reason for that is you have a strong trend here, and you're looking at a retracement of that trend, right? So you're looking at basically, let me draw that out here. You're having a low from here, you got a trend, the trend ends, and you're looking for a pullback. Now, if you have a shallow shoulder, 382, that's even stronger. But generally, for the symmetry, I look for that 50% to 618 level. And if it gets much below that, starts closing below that, that really starts to invalidate the retracement of that prior uptrend, and it also makes that right shoulder very deep. And at that point, I'm not necessarily trading the inverse head and shoulder pattern. Maybe I'm looking more at a double bottom or something else, but that kind of starts to invalidate that, which is why I like to see those fib retracement levels hold. And so in this case, it did. And then we had that rally, of course, and then it paused very briefly right at that neckline and then blasted right through that. And when it did, look at the volume signature on that breakout. Very strong volume on the way up here, confirmed the breakout of that head and shoulder pattern. And also the volume signature here during the formation of the pattern. The left shoulder and the head had the highest volume, and then volume declined here as it began to create that right shoulder. And so this one was textbook. I mean, just lined up beautifully, and it formed over the course of about a month and a half or so, about a month. Let me see the exact date here. So if we go here to the breakout point, that was 37 days basically, and so just a little bit over a month. And so this was a good example of that. And so let's fast forward and look at the one that we're seeing potentially form right now. And so if we look at where we've come off the back of a big break to the downside, so that once we broke out of that very tight range here, broke below 6K, we've just been in a very strong downtrend for the last month and a half or so. And we saw the first potential low form here in late November. We had a rally, and then you saw another strong leg down, and then here in the last couple of weeks we started to see some bottoming action before we saw another strong rally and then a pullback. And so let's kind of look at the same signatures, the same characteristics that we were just looking at. So looking at the volume first, you can see here the left shoulder, the head volume not super high. I would have liked to see some really strong volume right at the depth of that head, but it is higher than what we're seeing here in the most recent days when this right shoulder is forming. And so technically it still lines up okay. Not perfect, but lining up, you can see this volume spike here kind of corresponds with the low that we saw right here. So that's okay there. Now the neckline would be connecting these 2 points here to here. And there's two ways to do that. If you want to be conservative, a tighter neckline, you do the candle bodies on the daily charts, and that makes your neckline lower, a little bit more aggressive before you can call it a breakout. If you wanted to be more conservative, you'll zoom in, go to the 4-hour chart, and then you make your neckline a little bit higher using kind of the peaks on the 4-hour chart, which would be here and here. So you can see that changes the picture a little bit, gives you a little bit more assurance that it's breaking out before you call it a breakout. On the daily chart, that kind of takes it off of this little consolidation here. So the drawback to that is you're getting in a little bit late if you're waiting for a breakout. Now I'm going to go over 3 different ways to trade this pattern. One of them is not waiting for a breakout. But that's just the way you draw the neckline. And this is downward sloping, which is positive. Now looking at the symmetry here, you've got the left shoulder. This peak is your head. And then you've got a potential right shoulder forming here. And you can see it's very symmetrical. I mean, if you look at the distance here from the peak of this shoulder to the low of the head, it's about 20 days. You do it this way out, it's about 13 days, so it's not bad. If you centered it right in the middle of the head, it's even better, right? If you go this way out, it's about 16 days. If you go out that way, it's exactly 16 days. And so it's pretty symmetrical from that perspective. Looking pretty good there. Now looking at the pullback using Fibonacci, if we did the depth of the head, ran that up to that wick there, maybe hard to see on the screen, but there's a little tiny wick there right around 4,200. And let me zoom in here a little bit for us. And I've been showing you guys this chart here on some of my posts here recently, but you can see we've had this run up, had a little bit of choppy action here, and then for the last few days pulling back down, and then yesterday landed right around that 618 retracement level. So looking very positive from that perspective. The fact that we had a low being set, and then today this daily candle is pushing higher, already higher than the prior 2-day highs, which is positive, and it happened to just correspond with this 618 retracement level. And so that's very positive to see, and right now it's starting to really play out. Now had the prices continued lower today, I would have really begun to get more suspect on this pattern. I would have not wanted to see it get below that 3,500 level really, or if it did, very briefly and then close above. The fact that we just kind of saw some volume coming in here today off of this low, you can see we had that breakdown yesterday, then it just kind of sat tight for a few 4-hour candles, and then today strong volume coming in as it pushes off of that low. So I'm liking that action. It really starting to build a case for this right shoulder forming here, but now there's a line drawn in the sand. If you start to see a pullback here, prices need to hold above this most recent swing low, which is around that 3570 level, to really create this valid pattern, right? So you can have some choppy action here. That's okay. You can see that back here, right? You had basically 3 or 4 days of very choppy action that created that left shoulder. That could certainly happen here. You can have a bigger pullback here and some sideways action for another day or two, and then maybe the blast higher after that. But you don't want to see this level violated at this point, just because on the 4-hour chart, that's been a very strong move off the lows. And so the bull case needs to be maintained if this pattern's going to play out, meaning we don't want to violate that low there. So on the upside, there's a couple of ways to measure targets on patterns like this. The first one is doing a kind of standard measured move. You can do this with many patterns, and the way you do that is you take the depth of the head up to the neckline. I'm going to do a more conservative well, let's do this one here. This is based on the 4-hour chart. So you take it to the neckline that you've drawn, and then you extrapolate that out from the point where prices will break out above the neckline. And so let's assume, of course there's a lot of assumption here, let's assume prices run up here and they'll break out here kind of going into New Year. So the neckline would be right around that 4,100, 4,150 level at that point. And so if we extrapolate that out, you can see this projects up to around 5,200, maybe 5,300. And the thing I always like to test is, does that line up with anything at all? Does that make sense that it would bounce to that level? And you can see there's a little bit of a resistance zone back here. This was the first drop that we had from the break of 6K, kind of set tight for a few days before the next leg lower. So this will clearly be resistance on the way up if prices get that high. And so that's around 5,300 to around 5,500, 5,600. And so this is taking us just below that. Another way to do it is a fib retracement on the bounce of this entire leg lower. So what I'm looking at here is, if you did a fib from this point down and then prices bounced, how high could they bounce? So let's look at some levels there. And so you can say this is the impulse leg that started it lower. You extrapolate that down to the bottom, and your 618 is right here around 5,000. So that puts it around 5,000. That's a more conservative target, and that's really what I'd be looking at. That's also a psychological number, right? That 5K psychological. Prices rally that high. That's going to be another challenge that traders will be looking at. Now, if we move the neckline lower and take that more conservative measurement, then that'll change this measurement a little bit. So you'll squish this one down some. And if we extrapolate that out, same breakout point, you can see that now it only measures to about 5K. And so that'd be a good conservative target on the way up, is that 5K based on the fib retracement, based on psychological round numbers. And so that's more what I'd be looking at that point. Either tighten stops or take some profits, and then if it keeps going, then let it ride. But that's the first target that I'm looking at on this trade. Another way to do it, don't show this very often, but another way to do it is using extensions on Fibonacci retracements. And so what you'll do is you basically would measure this move here, right? This box that we were just looking at. So you have that prior rally, and then you have a pullback almost exactly to a key Fibonacci level. So this little wave is respecting those levels. So I will do an extension based off of that whole level. So I'll pull that up to the top, pull that back down, and let me show that there. And there's a couple of key levels that I look for when I'm doing price targets on fib extensions. Of course, the first one is the 1 level, then 1272 is very popular, and then 1618. And notice 1618 takes it right to 49.40. And so that's pretty close to that 5K number. So again, that just gives me another data point that says this would be a good target if this pattern broke out based on fib levels, based on bounce levels, based on technical measured moves. And so I'm seeing three things line up there around that 5K level. Could it go higher? Could it go to the 2.0? Absolutely, and that's about 5,300, which lines up well with this prior resistance level. So these are several ways to look at targets on the upside using fib extensions. You can do measured moves. You could do bounces on this entire retracement. So there's just a lot of different ways to do it. But that's the way I'm looking at it. So right now, that's what I'd be watching, is around 5K, maybe as high as 5,600 is the window that I'd be watching on a way up if this breaks out. Of course, that's a big if. We're making a lot of assumptions and extrapolating, but you got to do that if you're going to plan out a trade, right? Because then now you have a potential target zone. Now you can start doing risk reward entries and all that measurement. So those are the characteristics of the head and shoulders. That's how you measure potential targets. Now, how do we actually trade this? Now, there's three different ways that I like to trade these patterns here. The first is buying before the breakout, right? So the traditional method says you wait for a break above the neckline. When it breaks above the neckline, that's a breakout and it's a go, right? The pattern has been confirmed and you buy there. In my opinion, you're getting in a little bit late. And so on double bottoms or head and shoulder patterns, or even these cup and handle type patterns, it's always nice if you can get in a little bit early, gives you some more margin. So buying before the breakout is what I generally like to do here. So I'm going to zoom in, go to that 4-hour chart, and I like to buy when I get some good signals that, hey, maybe this right shoulder's forming or has been formed, or what I'm looking for, right? So I showed that prior retracement level, and then we saw a bounce right here, and then yesterday prices dropped back into that target that I was looking at on that 618 retracement level. And so I had a dip order filled here, and once it started looking like it was done, I basically loaded up here. So I went 100% BTC on this right shoulder, and the reason for that is it's a relatively good risk reward ratio at that point, because if I'm going in long at 3,600, I don't have to give it much room to the downside before I say, you know, this right shoulder is probably not going to form, right? If you wanted to give it some wiggle room, you can give it as much as, you know, 34.50 or whatever that is, but that's still only about 3 or 4% to the downside. And even if it only rallies up to the neckline and fails, you know, you're talking about a 10 to 12% rally. That's a 3R multiple. And so just getting to the neckline, you're already in the green by 10 to 15% before an official breakout. And so that's why I like to buy at that point. Now, you know, you don't have to go 100%. You can maybe take your first position once it looks like the shoulder is starting to form. And today was good confirmation of that. If you waited until today, it's still fine, right? And so that's trade number one, is buying along the right shoulder here, somewhere along this shoulder before the actual breakout. So the first way I like to trade it is getting in before the actual breakout on a pattern like this, because a lot of folks are going to be watching it. Once it starts to get closer to the neckline, everyone's going to think it's going to break out, and so you could see that breakout happen shortly after. So getting in along the shoulder is always nice, and of course your stop, let's say I got in today, then your stop is basically the low of that shoulder. So if you got in here, for example, then at that point your stop is the low of that shoulder. So it's about a 6% stop. So that's one way to trade it. Another way to trade it is the traditional way, and that's waiting for a breakout. And so if you're looking at a 4-hour chart and you're drawing your neckline there, then you'd be waiting for a cross above this blue line. And that's kind of the traditional way, right? So you have your targets, you're looking for a breakout, that's confirmation, and then you have your upside target. So in this example, your trade would basically be enter on a breakout, and then your upside target is the projected target of the measured move. And the challenge with this one is you can have throwbacks, you can have pullbacks below the line, and then a rally higher. So a logical place for a stop, in the way the textbook example has it, is the low of the shoulder, right? So that's generally where you would put your stop. The reason for that is if you have a breakout and a throwback, you're still in the trade, but if the throwback fails and it undercuts that shoulder, then that invalidates the trade, for example. So that's where you would put your logical stop. But the challenge with that is, you have a lower R multiple now. You have a very wide stop around that 13% mark or so. And so I wouldn't put my stop there personally. That's where it logically should go. But I'd be looking at some moving averages or something and putting it a little bit higher than that. And if it crossed a certain threshold below that neckline, then I'd get out of the way. But that that's a little bit more kind of just personal discretion there at that point. So that's one way to do it, but that's your traditional way, is waiting for the breakout. And then the third way is you wait for the breakout, wait for that confirmation, and then you look for a throwback either to the neckline or just below the neckline. And so this little zone here, right above the neckline to just below the neckline, that's your buy zone at that point. So you wait for that breakout, and then you look for some slight pullback, maybe a retest, and you put some orders here just above the neckline, and then you have a stop again similar to that first breakout point just below the neckline. And so that's the third way to do it. That's a nice way to do it too, because it's not uncommon to see throwbacks. Not every pattern has a throwback, but it's not uncommon. You have maybe a 50% chance of getting a throwback there. And so, but the risk here is if you're waiting for a throwback, you may never get it. Prices may go higher, may go flat, and then keep going higher, like the one we saw in June and July. That one didn't have a throwback. It just went up, and then it went flat for a while, and then it gave you one more leg up before it was over. And so those are the three ways to trade this pattern. Again, the most aggressive is buying near the low of the shoulder, but that's also the higher risk reward way. The second way that I would like to do it is to either put an order, a buy conditional order right at the neckline, catch that breakout, and if I didn't, then I'd be waiting for a throwback or looking for a little, like a bull flag entry or something on the 1-hour chart, and then jump in it after the breakout. So those are the three ways to trade this. Right now, this one's shaping up pretty well. We'll see if it plays out here over the next couple of days. Just timing wise, if you look at the right shoulder, and again, this is just using symmetry, it doesn't have to follow this example, but you can see it basically took about 5 to 6 days to form this shoulder before it broke out. And if you did that same math here, you would say you have a breakout here on basically December 30th to December 31st is where you're targeting this potential breakout here. So that's what I'm looking at as far as when we could see this breakout, and then the actual move to the target. Now that can take longer because it's not going to be a straight line. It could, but it's not, right? It's going to be maybe rallies and chops, and who knows how long it'll take to get there if it does. But that's a couple of ways I'm playing it. Right now I'm projecting a breakout in and around end of year, going into the new year here. That'd be a nice way to start the new year in my opinion, but we'll see how that goes. So I hope that helps. I just thought it would be applicable right now.